Okay, this is to answer a question from a member. Alina is asking, when you said this, did you mean only trade in the direction of the higher time frame? Because sometimes this is in direct opposition with the rules we are following, which is to trade in the direction the market has moved from open. Yes. So, well, not yes. What I meant to say is, it's a good question because it could cause confusion. So on the hourly chart, this is what we trade, right? So suppose this morning when you saw Swizzy, it went up first, but then it went down, and then you have the seed here. So if you took this seed and it triggered 1 pip below, I assume you won't be triggered on this one, but if you did, you probably had a rent. And then on the next one, you will trade again. Now, that was yesterday. Today, when it was happening here. Now, if you were to follow the rule of follow the trend of the daily, you're going totally against it. So that means you will be only taking shorts, but that's not what I'm saying. Because if you did that, you won't be taking that short that I have on my account. And that is the main purpose of this method. It's very hard to follow, but hugely profitable. So if you look at this signal here, and I will mark it in a way, I'm sure you understand it on anyway, but for anyone else watching, that's where your short is. And the ideal way of managing trades based on this method, if you can hold on to it, is to take these trades and then convert them into a free trade quickly. And then you want to do nothing with it, because what you'll do is the way you would manage is that you would go to the daily chart and you will wait for it to go on the other side of, so here. So what do we have on the daily chart here? What we see here is that this is the 20 moving average exponential. We can see here on the Swizzy chart, or I could have given the UJ example of this, is that it trended pretty well for these three months. So just using the simple analysis of, you know, when it crossed the 20 EMA, or simply looking at the price that it went 3 months, it went up. Even if you look at the, let's say, weekly chart, can you see this? It was going up all of this time. So the whole of this year, it's been actually going up. So what I'm trying to say is that keep your trades aligned with the daily, is that have your analysis. So if you see that the chart on the daily has extended and it's gone all to the top, and then, like for example in April, we saw that there is this divergence going on between the two levels, right? Well, not like that, but we can draw it this way. I mean, we don't really need to draw the trend line because we have the moving average, but if you look at it, it gives you that. And if you have the AO underneath, you will see there'll be a divergence here. So if you go to the 4-hour chart or the 12-hour chart, you will see a 3, 4, 5 complete, but we don't need to do that. So generally you see that this could be extended, and now probably it's going to turn around. So if it is going to turn around and I'm going to take a trade, if I took this trade here and then I held it through all of this, by doing nothing but waiting for it to, so if you took that trade there, about 3-4 days later, it was below the 20 EMA, and then you let it run further, let it run. If you trail candles, you would have gotten out here, so that would be a very good winner, but you don't want to do that. You want to be in this in a long term. So for example, if you were to time a trade somewhere here and then you stayed in it, did not get out, for example, on this close, or let's suppose you got out on this close, but somewhere here you got in again, you wanted to stay in this all the way till it closed below this. So if you could do that, or even if you got in here and then you saw this gap, you see this gap between the moving average and that, or even if you don't have the moving average, if you saw this parabolic move, you could have exited trailing the daily candles. So you took a trade on the hourly, you had a 10 pip stop loss, and then you got yourself 300, 320. So on this one, the trade that we have running has a 13-point stop loss and is sitting at 347 point profit. And what is exciting for me is that sometimes, because I trade the DAX on M5 and US 30, if you apply it to that, you will have quite a lot of rents here and there because of the 5-minute chart. You can actually catch those 200 and 300 point winners on DAX and US 30 on the 5-minute or a 10-minute chart as well. But that's a different thing. So what I was saying, back to the question, referring to the daily chart, was this: keep it in line. So let's go, before I finish, let's do another example. Let's do, here we go. So that's the euro dollar, right? Not euro dollar, actually. I wanted to go to the dollar yen. Yes. The dollar yen had an interesting story to tell. Okay, where's my template? Which one was it? Is it this one? No. Sorry guys, this is not my usual MT4. So I'm referring to this daily chart. So similar to Swizzy, but there's a different story on UJ. Let's bring the 20 moving average. So we saw this. And by the way, this is the simple trading method on the daily chart. You can take these seeds on pullbacks on the daily and then just let them run on the 20 EMA, exit here. So even on the daily, you could have taken this for like 32 stop loss and 440 pips profit. But these aren't going to be that many. That other method, you could, time a trade from here. So you time it here, like for example, where UJ is now here. I'm going haphazard, but anyway, let's suppose you took a trade there, you let it run, then you had two options. Now if you look at this, and this is what I was looking at, after this candle, let's zoom in, I can see these doji candles, 1, 2, 3, 4, and I could see that the tides were changing, they were turning around. So I wasn't really keen. The other day when you guys took this UJ short here, that's what I'm saying. We can make it clever trading if you want. Like when you guys were taking this one here, even though it went really nicely in our favor, I didn't even take, I don't know if I took it or not, but I wasn't keen on taking it because of what I was seeing there and because I was seeing what I was seeing here. So this analysis actually helped me, but I was keen on taking the longs on the other side if they happened here. So I did actually go long on these pullbacks instead. But because it was a pullback entry, I didn't kind of turn it into a daily. I got out somewhere there or something. But that's the whole plan. So if you have this daily chart analysis with it, it will help you with some of the analysis. Let's suppose we go to the 23rd of Feb. And this is the main thing, like, so, after what I'm saying right now, you have to like make a decision. If this is not, oh, hold on, let's change this to the correct time. 9. So that's the one, yeah. Or is it? See, this is one of that thing that would, like a huge RR. This one is, let's say 10 pip stop loss. This is where it was. So suppose you had your eye on the daily chart. You would already know that this UJ is moving up and down and up and down, and it's probably in a pullback, and it is a pullback entry on its own on the daily chart. So then with that information, if you went to the hourly chart and saw that signal right at the open here, I think you would have a lot more confidence. You take that, it would be break even, and just simply imagine, just imagine. I mean, yes, we're doing ideal stuff, but let's suppose you trailed the candles here because there was a gap between. You have 330. But suppose you actually stayed through it and you actually then trailed it because now it's very parabolic and you are sitting on huge profits. That's 490. Let's call it 500. Stop loss 10. 1:50. It needs patience, that's all. But all you have to do is time, try to take first 5-6 candles, look for those seeds. That's all you need to do. But armed with this information, something like this, for example, timing an entry here now, and suppose it actually goes and does this wave 5 up there, right? 3, 4, and 5. And if it goes all the way there and you have a time and entry, you have a nice, lovely. So that's why I started you guys first on the 5 hour, just to get the taste of it, then the 10 hour, so that you could understand. But the ultimate goal is to actually manage your trades like this. Either use the daily swing lows, right? Or use the 20 EMA or something like that. But when you choose something, stick to it. If you, however, stick to, let's say, taking profits on, suppose we were discussing this with Sam the other day. Suppose you just stuck to 50 EMA, then it would become, turn into a really nice swing trading method, which in this occasion would have made you around 300 pips. 30R, I think, yeah. So pretty good. That's a pretty good one. And then you won't use the moving average for filtering trades, but it can be done. You can even do that. So suppose if here it was conflicting, you can filter, and then when price goes above those highs, here comes the daily analysis with this as well. So for example, what is this phase? What's this phase? Well, it's this phase where you can clearly see that the market was going really strongly, and now it has to actually take, it has to go into a trading range. If it's not going to turn around, it's going to go into a trading range. So you can take those decisions and say, listen, this market is in a trading range, but in an uptrend. So what do I want to do? Do I want to be aggressive here, or do I want to, not trade? So you could have taken that decision, followed this range kind of situation. Let me delete that bit. Let's suppose you're here, and then you look at these charts, it's dirty, and then you see this bit come in here. Sam luckily got this one, because that's just when he started a few days ago. So he took this and he had his 10 hour. But ideally, he could have taken that and then let it run, and even had a bigger than 10 hour kind of thing. So 50 is a very good mechanism for if you don't want to look at the daily chart and stuff, or if you want to use it as even as a filter for trades. You will miss some, but it will give you structure, I believe, right? For example, like take this one, right? But don't take this, because you know that the slope of the 50 is down. It's kind of going downtrend. You don't want to take this, for example, or you would have missed this as well, because 50 is above the open. Over here you probably take the short, right? Over here you would be taking short but not longs, and now here you're only taking longs. Here you probably were taking the long, but you won't take the short, which didn't really matter anyway. Let's find a few more examples. So if you were just blindly following the 50 here, it didn't really help you. But if you went to the daily chart and did your analysis and found out that actually the daily chart is going through a range, it will be a lot easier for you to handle these kind of situations in the market. And so when you see that the UJ is going through this, do you have any other pair that is actually doing something else? So if we apply the same to euro dollar now, it's turned into a big video. I thought I would do just a clip. We go to the hourly chart. See, what the 50 would do is that you won't be taking this one on EU, right? So it can do that to you as well. So there is always a give and take on this. So I would say the best thing is to do your trend analysis on the daily chart, not using the moving average, but rather, the swing highs and swing lows, or have a 20 moving average on the daily chart. Let's say you can do this as well. Visualize this on the daily only, right? Save that template. When you go to the hourly, it's not going to be shown. This is my mechanism, how I do it. I don't want to see that 20 to interfere with my mindset. So I look at the daily. What's euro dollar doing? Uptrend, my friend. So here it was an uptrend. Very easy to take any long signals. Unfortunately though, we weren't able to capture anything I think I missed this one or something happened. This was the one. Good, I'm making this video. It's kind of a bit of a review of this method. If you look at it, this was perfect timing because that's the two double seeds above the 20 EMA. You're thinking that if it goes above this, maybe the trend will resume, right? And then you're on the hourly chart, cleverly taking your beautiful trade. So if I took this one and used the correct stop loss and stuff, and then let it run, I might have collected. Let's have a look at it. All right. So this, if I went short, this would be a rent. If I went short here, this would be a rent. If I went long here, this would be a rent, right? So I'm in a long trade, but I've taken -2 already. If I'm in this one, it would be a break even. If I took this one, this would be a break even. And that's not valid. So this is a rent. So I'm kind of -3 on that, but I'm 10R up on that as well over here. So that's kind of like the thing that's going on. And who knows how long will this one go. So as long as it keeps going steadily like this, what we would call within a tight channel, right? Something like this. If it keeps going in a tight channel, the moving average will keep following it easily. But if it goes parabolic, extend itself like this and stretches away from the moving average, then you have a choice to actually make a decision. If say around this area it's kind of stretched out, it will be a very good point to take profits. So I hope it makes sense.